Hey everyone, welcome back. Today we're going to talk about something serious, something that shows just how quickly things can change when financial pressure builds. Kodak, a company that was once one of the most trusted names in photography, has announced that it's ending its US pension plan. And this isn't just about Kodak, it's also a bigger warning sign about what can happen to retirement security in the middle of a financial crisis. So let's dig in and really understand what's happening here, because this could affect not only Kodak workers and retirees, but anyone thinking about their own future. Right now, Kodak is facing a deep financial squeeze. The company has about $500 million in debt coming due over the next year. That's not just a big number, it's a life or death number for a company of their current size. The scary part is they don't yet have financing lined up to cover it. That's why their latest filings included language about substantial doubt over whether they can keep operating. When a company has to say that out loud, it's a huge red flag, not just for Wall Street, but also for the employees and retirees depending on them. Their latest financial results make it clear how rough things are. Revenue was down, but profits fell off a cliff. Last year, in the same quarter, they had a $26 million profit. This year, a $26 million loss. That's a $52 million swing in the wrong direction in just 12 months. Cash reserves are shrinking too, down by $155 million. And most of what's left is stuck overseas, which means they can't use it quickly to pay US bills. Rising manufacturing costs, shrinking customer demand, and global trade pressures are squeezing them on all sides. This is where the pension decision comes in. Kodak's CFO said that ending their US pension plan could free up about $500 million in liquidity. That's almost exactly the amount of debt they need to cover. The mechanics are simple but painful. Current retirees will keep getting their checks, but the money will come from an insurance company instead of Kodak directly. That could actually feel more secure for some, since insurers are heavily regulated and usually well capitalized. But for younger workers or new hires, there's no pension waiting for them at all. That's a huge cultural shift, because Kodak's pension wasn't just a benefit, it was a promise, something that gave people loyalty to the company for decades. And Kodak isn't alone. Across the US, pensions have been vanishing for years. In the mid-20th century, pensions were standard, workers put in their years, and the company rewarded them with guaranteed income for life. But over the past few decades, companies have been shifting to 401k plans and other retirement savings accounts, where the responsibility falls on the employee. It's less risk for the company, more uncertainty for the worker, and Kodak's decision is just one more step in that direction. Looking back, it's almost tragic how Kodak went from being one of the most innovative companies in history to struggling to survive. Founded in the 1800s, they made photography accessible to everyone. Their cameras were cheap, simple, and reliable. By the 1970s, they owned almost 90% of the film market in the US. They even invented the digital camera in 1975, years before anyone else. But here's the twist. They shelved it because they didn't want to hurt their film business. That hesitation cost them dearly when digital photography finally took over. By the 2000s, the rise of smartphones changed the entire game. Kodak thought their competitors were Canon or Nikon, but the real disruption came from Apple, Google, and Samsung. People no longer needed separate cameras. Their phones did the job. Kodak was caught off guard, filed for bankruptcy in 2012, and watched as decades of dominance collapsed. Their stock, once a blue-chip favorite in retirement funds, was wiped out. After bankruptcy, they tried reinventing themselves. They left consumer cameras behind and shifted to commercial printing, packaging, chemicals, and even pharmaceutical ingredients. In 2020, when a government loan deal for pharmaceuticals briefly hit the news, their stock skyrocketed for a moment, but the excitement faded fast. Today, their advanced materials division, making things like industrial films and chemical products, is one of their few steady sources of revenue. But it's not enough to offset the weight of their debt and shrinking demand. Kodak didn't fail because they ignored change entirely. They actually invested in digital technology, but they misunderstood the real competition and moved too slowly. That's a lesson for all of us, not just in business but in life. Sometimes the biggest threat isn't the one you see in front of you. It's the one coming from the side, quietly building up until it suddenly takes over. Think about artificial intelligence today. Everyone assumes the biggest tech companies are untouchable, but history shows us that even giants can fall if they miss the next shift. For individuals like us, this story is a wake-up call. Retirement security is changing. If you have a pension, know who's backing it. If you're relying on a 401k, remember that markets can rise and fall. Flexibility is key. Don't keep all your eggs in one basket. Even small moves, like rebalancing your portfolio or building up an emergency fund, can make a huge difference when unexpected changes hit. Kodak employees once thought their pensions were rock solid. Now that certainty is gone. So what happens next for Kodak? Survival will depend on whether they can restructure their debt or find new financing. If they manage it, and if their newer divisions grow, they might endure as a much smaller, specialized company. If not, this could mark the final chapter for one of America's most iconic names. Either way, the decision to cancel the pension shows just how desperate things have become. For you and me, the lesson is simple. Nothing is guaranteed. Companies change. Industries rise and fall. Promises can be broken. The best protection is the one you build yourself, with savings, smart planning, and flexibility. I'd really like to hear your thoughts on this. If you had a pension, would you feel safer with it managed by your employer or transferred to an insurance company? Drop your opinion in the comments. I think a lot of people could benefit from hearing different perspectives. And if you find these conversations useful, make sure you subscribe so you don't miss the next one. There are so many stories like this, and each one teaches us something about how to protect ourselves financially.